that you take a trailing stop loss, which will do it automatically for you, where it follows the market up if you're long, and will also follow the market lower if you're short. It may be part of your trading plan that every position you take you have a trailing stop loss on, or it may only be in specific asset class such as equities or CFDs. You need to predetermine what that is. How do you do it? Well, it's going to again differ between all of you. Your exit levels are probably the hardest part of a trading equation. The entry is not so difficult generally. It's more the exit levels. Am I being too greedy? Am I being realistic? These are some of the things you might want to consider when you're working out your exit strategies. Risk-reward ratio, for example, support and resistance line. You may want to use some studies in technical analysis, such as some of those there. You may also want to use a combination of technical and fundamental analysis. Okay, do I get square before the big figures in the US, which are generally the CPI and the unemployment figures? Do I square up before that, or do I run the risk? If so, am I going to get gapping on my stop losses and slippage and all of those sorts of things? You need to have it predetermined. Again, as with exit, entry, we tend to find, and I'm sure a lot of you do too, that the entry's not such a bad thing to do. It's more, how do I exit? You've got to know your exit prices. Before you can identify your entry price. You should have a good reason for the entry and exit levels of every trade that you execute. Not just a situation where that looks okay because you haven't done any of your research or your homework. You need to have predetermined things, and you might have, for example, a selection of things that have to be ticked off before you actually take a position in the marketplace. There's got to be a good reason. Okay, remember, going back to the rational versus emotional, there has to be a rational, not an emotional decision as to do it. Again, the things that you might want to look at in regards to your entries are risk reward, support and resistance. It may be that you do not want to enter except, for example, when a resistance line's been breached on the top side of a market and you enter on a stop basis. That would form part of your trading plan. Technical analysis and obviously fundamental analysis as well. Now, you need to keep a trade journal. Well, you don't need to, but we encourage you to keep a trade journal. It just gives you a greater overall picture of what's happening in the market. You can actually get these off the Get Trader. I'm not going to go into that now, but you can get them for each position that you have in a variety of different ways. What instrument, long, short, when you did it, how much you did it, brokerage, commission, all of those sorts of things. What's the profit and loss? Then down the bottom here you'll see that we've got rationale behind the trade. Now if you can't fill that in, you shouldn't have taken the trade in the first place. Why the position made or lost money. These two lines here we've put in simply so that you can reassess. If it becomes a common occurrence that you don't have rationale and you have you can't answer why the position made or lost money, then maybe you need to reassess your trading plan, or alternatively maybe you need to follow your trading plan. You also therefore need to reflect on your performance. Assess the market's volatility for the day, for example, and see if it gives you clues as to what you can expect tomorrow. Okay, it's all part of reflecting on your performance. Add up your profit and loss. All of these things will assist you throughout your trading experience, and hopefully it will be able to allow you to adjust your trading plan so that you can work out whether it's actually working for you or needs to be amended in some shape or form. So add up your profit and losses for the day and reflect on it and say, well, I had a great day or I had a bad day. You need a positive emotion when you're reflecting on it. You need to be able to decide whether your trading plans actually worked for that day, and if not, why. Why did you lose or why did you win on that particular day, whereas the day before you're going to, you may have had the opposite result. So you need to reflect on that. Each day will probably at the moment be different.